Ladies and gentlemen, good day and welcome to the Orient Limited Q2 and H1 FY25 earnings conference call. As a reminder, all participants' lines will be in the listen-only mode, and there will be an opportunity for you to ask questions after the presentation concludes. Should you need assistance during the conference call, please signal an operator by pressing star then zero on your touchtone phone. Please note that this conference is being recorded. I now hand the conference over to Mr. Q2FY25 from Stellar Investor Relation Advisors. Thank you, and over to you, sir.
Thank you. Good evening, everyone, and thank you for joining us today. I'm with us today the senior management team of Orient Limited, Mr. Aditya Gupta, Chief Executive Officer, and Mr. Himanshu Jindal, Chief Financial Officer, who will represent the company on the earnings call today. The management will be sharing the key operating and financial highlights for the quarter and half year ended September 30, 2024, followed by a question and answer session. Please note, this call may contain some of the forward-looking statements which are completely based upon our beliefs, opinions, and expectations as of today. These statements are not a guarantee of our future performance and involve unforeseen risks and uncertainties. The company also undertakes no obligation to update any forward-looking statement to reflect developments that occur after a statement is made. I now hand over the conference to Mr. Aditya Gupta. Thank you, and over to you, sir.
Thank you. Good afternoon, ladies and gentlemen, and welcome to our Q2 and H1 FY25 earnings call. There is no material change to the domestic demand conditions in Q2. Exports have continued to remain impacted given the volatility of ocean freight. The monthly run rates moderated to 1,000 to 200 crores versus 1,500 to 2,000 crores last year. This and the overcapacity in the industry, especially at Morbi, did have a consequential impact on pricing and volume build-up throughout H1. However, the good side is that now we are witnessing moderation in capacity addition, closure of capacities, and also proactive steps from Morbi to curtail supply to reduce the mismatch between demand and supply. The changing landscape in the industry expected increase in time consumption in H2, and our own efforts on branding and strengthening of our sales team structure should enable Orient to come back strongly hereon. Despite these near-term pressures, as far as Q2 and H1 are concerned, we were able to grow our revenues, albeit at a pace slower than our expectations. H1 sales grew by 1.6% year-on-year to rupees 307 crores. To drive premiumization and brand recall, we continue to invest on branding, our spend increasing to 4.1% of our revenue, primarily to support the TV campaign that we have been running for last 10 odd months consistently. Our product mixes have changed rapidly in the last 6 months to match customer expectations with DVD sales improving to 40%, increasing by 14% over last year. Our distribution too continues to expand as we have added net 19 more OBTX in the last 6 months, taking the active count to 318. These OBTX now contribute 46% of our revenue versus 42% last year. Our costs have been under control, and with the product mix change, our gross margins are back to normal. With this, I request our CFO, Himanshu Jindal, for the financial and other updates. Over to you, Himanshu.
Thank you, Aditya. Good afternoon. First half was below expectations on revenue front, given the overall demand-supply situation, as Aditya mentioned. We have been driving premiumization as a strategy for some time now, given our increased investments on branding and the capex that has been put in play, especially on GVT, Secunderabad and Dora. With the product mix improvement in the last 6 months, we were able to successfully navigate the price drops that were essential to recover our market share. The overall cost management also helped. We retained our strong focus on basics, which is consistently improving the consumption KPI and working on alternative cheaper procurement strategies, especially on raw material and power and fuel mixes. On the figures now, number one, cost of production in first half was approximately 5.5% lower versus last year on a like-for-like basis, which is at constant product mix and energy cost. Our gross margins expanded. So for quarter two, we were at 25.7% versus 33% same time last year, which is a 2.7% improvement. EBITDA on a like-for-like basis too, which is excluding the impact of these increased investments that we're doing on branding consistently, for the quarter was 6.2%, again higher by 2.5% versus the last year. EBITDA on a reported basis though, given our investments on branding, was 5% versus 3.8% last year same time. Our balance sheet continues to remain healthy with a net debt of 35 crores, and our core cash conversion cycles have been close to 33 in quarter two. With this, I would request the moderator to open the line for Q&A. Thank you.
Thank you very much. We will now begin the question and answer session. Anyone who wishes to ask a question may press star and 1 on their touchtone telephone. If you wish to remove yourself from the question queue, you may press star and 2. Participants are requested to use handsets while asking a question. Ladies and gentlemen, we will wait for a moment while the question queue assembles. The first question is from the line of Miraj from Orient Capital. Please go ahead.
Hi, good evening, Aditya sir, Himanshu sir. Congratulations on a decent set. I'm aware that the industry in the past first half was weak, but I believe keeping that in mind, the numbers do look decent. Starting off with the question, sir, I wanted to understand if you could start with the volume figures for the quarter. I wasn't able to find them in the presentation.
Miraj, I think as a strategy going forward, I think we would want to share the data points on an annual basis. I'll tell you the reasons thereof. One, see, we only sell tiles. The others are more diversified in terms of my peers. So whatever you see in my top line is only tiles, where the percentages increases or drops are very clearly transparently available. The second is, you know about how the industry is reacting to prices now. Everyone is working towards minimization, changing portfolios, trying and doing more GBT. This is something which is helping us also. You saw that in our gross margins this quarter. So I think with premiumization becoming a part of our strategy, with more and more money being spent on branding and capex, I think you get a picture of where the volumes could have been, right? This is also a learning coming in from allied industries. You see paint, you see sanitary, where there are multiple categories of products, everyone trying to do premiumization and volumes are not unfortunately available. The other reason why we thought we should hold on to volumes is also for strategic reasons. Sharing too much in the public domain, unfortunately, we would love to do that, but sometimes it becomes counterproductive to our own interests. So for those reasons, I think we are holding it on. Not that you will not get it. Year-end, you will get the composite picture.
Understood. In that case, sir, the ASPs also you won't be sharing?
No, so if I give you ASPs, you get the volumes immediately. So you know how I played in the market in terms of ASPs is something that I'm trying to protect.
Understood. Okay. Sir, secondly, the 5.5 MSM from Proton, it has been mentioned that it started in Q2. So for how many days was it available in Q2, or the production will start from Q3 only?
For all practical purposes, please assume quarter 3 coming in. Yeah. So this is just something which has started. They are in that phase of stabilization. It will take time. And eventually, largely, this capacity is meant for exports, for which baby is already created, right? The Cestrum, the project baby that we worked on. So so whatever we do, ramp up should happen in the next half a year or 1 year.
Understood. Okay. The next question was regarding that only, sir. We wanted to understand that for this entity that we created for exports, just as you mentioned that we'll be exporting whatever is being produced from Proton, but besides that also we were planning to export our own own production also. Any progress on that?
Yeah, we have already started doing that. The company is already in existence now. You know that as Festrum. Yeah, that's the wholly owned subsidiary. And this company has already started selling in a way. So there is some shipments that we've already done. But more importantly, Miraj, you would know export markets in general have not done so well. Last 3 months, 4 months have been really bad. Rates of 1,000 to 1,200 odd crores. So we need to be watchful. As and when there are opportunities, we'll try and do more and more out of it.
Understood. Okay, this is my final question before I get back in the queue, sir. On the consolidated numbers, I see there's a loss from JV and associates. Can you explain what happened over here?
So the twofold reasons. There are two JVs that we operate, or associate entities as I call them. One is Proton. I told you they put in a new plant now. So they have raised money, right, in their own balance sheet, which is not funded by OBL, which is not obviously consolidated at our ends also. So there is the depreciation in the finance charge coming into play in that entity in this quarter when there is hardly any production. There are trial costs, etc., which have also been incurred. In case of Koreal, again, some bit of it has to do with export markets not doing well. So the volumes have not been enough in actually both the JVs, because of export slowdown.
Understood. Got it. Okay, I'll get back in the queue. Thank you so much for answering.
Most welcome.
Thank you. Ladies and gentlemen, you may press star and 1 to ask a question. The next question is from the line of Chaitanya Gandhi from RNB. Please go ahead.
Hello. Am I audible?
Yes, please.
Yes. Thank you for the opportunity, sir. I wanted to know how are the different geographies currently doing since we are doing very crazy marketing in South and West. How is the response?
So we are getting good response from South and West. I think there is a product profile change which is currently underway. I think we are adding distribution. We are adding some new OBTVs which are our showrooms. But the overall revenues, because we are moving, these are areas which are very ceramic net for us. And we are getting very good traction after the DORA project in terms of GVT sale in these areas.
Okay, any projections?
No, we don't give projections at the company level, let alone the regional level, but we are quite hopeful that these areas will contribute very nicely to our growth going forward.
Okay. And also, sir, I have one more question on our DORA plant. How is it going? So capacity and all, how much are we utilizing currently?
See, the process is under ramp-up as we speak.
Okay.
We are not obviously operating at optimum capacities. If you want to understand where the growth would come in from. See, what you should know, if you're tracking our company, we did major expansions in DORA and in Hotspot almost simultaneously, both largely meant for South and West. Now the ramp-up has been at a time, or let me say the plants came at a time when the markets have been sluggish. So the ramp-ups are not adequate at this point in time. We obviously need to do more, and there is headroom for us to be able to do more and more there. Yeah. So the capacity utilizations are obviously not enough. We need to do much, much more.
Okay. Thank you so much, sir. That was from my side. Thank you.
Thank you. A reminder to all the participants, you may press star and 1 to ask a question. Ladies and gentlemen, you may press star and 1 to ask a question. The next follow-up question is from the line of Miraj from Orient Capital. Please go ahead.
Thank you. Sir, on the orders front, I wanted to understand how are things looking from the project side? Is there any change since the last quarter?
So Miraj, we have seen increasing number of new projects coming up, especially in the private side. And I think after post-monsoons, this time Q2 monsoons was far more aggressive than what was expected. So it kind of took a bit of toll on actual construction activity. Projects overall, we are seeing a good direction. I think next year will be better. Both new projects, for which time demand will be later, but also existing projects where construction activities are now going to pick up.
Okay. So mainly if I wanted to understand from the existing project side where, the orders would be coming in immediately instead of new projects which would take another at least 2 years from now. So let's say for any project that was started 2 years ago, have we started seeing inquiries on that front, sir? So if I wanted to just understand, gauge how quickly can we get the orders coming in from there?
So Viraj, we have the older projects which are now ready for tiling. We are seeing an increasing number of queries which we are not seeing in quarter one and quarter two. It has slowly started picking up, and this is kind of we are seeing bigger and bigger projects which are now asking around for tiling.
Understood. Any particular region from where these orders are coming in, or is it pan India?
I will have a regional split on this available, but I'm hearing about projects across. I'm hearing about them in north. I'm hearing a bit of them in east, some in west also and south also. So reasonably well spread out, Viraj.
Understood. Okay. So well, and because the reason I was asking was that the revenue share is a bit larger from the northern region. So I just wanted to understand if that is also the trend for project sales.
So I think we are hopeful to pick up some good projects in south and west also in H2. Discussions are on with various builders and all. Let's see how it goes.
Understood. And so the last time we spoke, it was mentioned that the ads that we are doing, ad spend, it would probably run for the entire FY25. Just wanted to understand that we still hold that that the ad spend will continue for FY25 and beyond FY25. Have you made any thoughts on that? That we will continue to run the ads?
So Viraj, it is continuing. The regional rates keep on changing. The properties on which we are advertising keeps changing. It's not just one flat line which is like kind of constant, month on month. As we speak, we are pretty clear that quarter three we will keep investing in media, maybe with a slightly different strategy, maybe on a different property. So I think actually we launched this campaign in December 23. So I guess it will for 12 months it is going to be live at least, and we'll see for quarter four when we come to that. So as more than the campaign, Viraj, I think the bigger story here is that this whole attempt to drive realization, to get closer to the customer, and to build a certain level of brand awareness is something which we are committed to. I'll just share one figure with you. I think in the last 9-10 months since we started this campaign, our website traffic is up by about 70% or so. So it's having a good impact. We just have to keep plugging away at it, and we are committed to doing that. Though quarter there will be some small adjustments here and there, market, which TV channel you go to, what creators do you use, and stuff like that.
Understood. And just one last thing, sir. On the anti-static tiles that we have, how are things looking over there? Because I think that's a patented product now.
So it's not a big, it was not supposed to be a volume driver, Viraj. It was always supposed to be like, one kind of tile which is, say, 2,000, 2,100 rupees per square meter, which helps us build differentiation in a very, very discerning, different kind of a customer. So we are happy with what it is, but it's not something which is dramatically going to change. It's not a big volume product.
Understood. The reason I wanted to understand was that if patents is also one of the way forwards, because we have certain patents in where we've applied for. So if that would also be a method to see driving volumes going ahead. That's not the case, right? That's what you explained.
What I didn't understand your question. What is the way forward?
So we have one patent which is of anti-static tiles. Besides that, also I believe there are certain patents pending which we've applied for. So I wanted to understand, just as you said, that this is not more of a volume play. You're just entering into a higher price range. So even for the other patents that we have applied for, that is also not for the volume play?
Okay, fine. I got your answer. See, it's like this. When you innovate, when you do R&D, when you kind of task your team to come up with something new, it's impossible to kind of straitjacket them and tell them that you only want this kind of a thing. So what is good is that the manufacturing teams are coming out with a product. Anti-static tile was one. The antiviral, antibacterial tile is the other this thing which we got a patent last year. So the good thing is that stuff like this is happening. I don't know which one will really catch the fancy of the customer and will become a big volume driver. But the bigger idea here is see it as a brand play. And at some point of time in the future, I don't know when, I think these things will help build customer preference and architect preference and professional buyers preference for brand OEM.
Perfect. Understood. Yeah, thank you so much, sir. That's all from my side, and all the best for the future.
Thanks, Suraj.
Thank you. Ladies and gentlemen, you may press star and one to ask a question. The next follow-up question is from the line of Chaitanya Gandhi from RMB. Please go ahead.
Hello, sir. Thank you for taking my question. So I wanted to understand, as we are increasing our ad spend quarter on quarter, so how long this will continue and what is the plan going ahead?
So Chaitanya, it's not that we are increasing sequentially every quarter. It's not that. We took a call about almost a year back that we will move into mass media. Before that, till December 23, before December 23, we were focused on brand building largely to the digital media. And December 23, we said that now we are good at that. We have a certain level we have reached it, so we will start now leveraging mass media also. That is a journey we are continuing. As I said earlier, the exact quarter-on-quarter strategy in terms of creative channel that you want to focus on, regions that you want to focus on, and also the exact spend that you want to put on TV in that quarter will keep changing. The overall direction what you can expect is that we will consistently keep investing in our brand with a mix of digital, mass media, and on-ground activities.
Okay. And so one more question. I might have missed it initially. So as we have started opening experience center, I have seen in Pune as well. So how much are we going to increase that number? Any number for that?
So we launched the 51 in H1 and we closed I think 31 or 32. So we have broadly added, net add is about 20 odd new OBTVs in H1.
Okay.
Which is about, so say almost one new OBTV a week is what we have added in H1, broadly speaking.
Okay. Thank you so much. That's all from my side. Thank you.
Thanks, Aditya.
Thank you. Ladies and gentlemen, you may press star and one to ask a question. A reminder to all the participants, you may press star and one to ask a question. Ladies and gentlemen, you may press star and one to ask a question. As there are no further questions, I would now like to hand the conference to the Mr. Himanshu Jindal, Chief Financial Officer, for closing comments.
Okay, thank you so much for your patience and interest in OPL. Hopefully, with the tailwinds coming into play now, with whatever we have been able to achieve in terms of our own working here at OPL, yes, there were challenges external and internal. I think we are coming out of it. Hopefully, we should see better quarters coming in. Thank you. Happy Diwali to all of you. Thank you. Take care.
Thank you. On behalf of Orient Bale Limited, that concludes this conference. Thank you for joining us, and you may now disconnect your lines. Thank you.